Alrighty, folks, this is the One Rental at a Time school community. I'm actually going to mute all because I hear some background noise, so let me do that. All right. If you want to ask questions, comments, talk about anything, you could do two things. You could raise your hand, which I will call on you, and then hopefully you turn on your camera so you could just ask me personally. Or if you are more comfortable and just want to put your questions in the comment section, you can do that as well. This is something I personally look forward to trying to do at least once a month. Usually I'm able to do it twice, but I do want to do it at least once a month for being a part of our school community. I am open to any and all questions. I do want to let you know about something I am starting to play with. It's an idea. I would love input, suggestions from all of you, given you are a part of the community. I am thinking about writing what I used to call a white paper when I was in software. It's probably better called an ebook today about how to use school, right? I think there's, there's just so much value in this community, so much more than the $20 a month. But I don't know that I've done a great job of articulating where the value is. So I'm thinking about writing an ebook, a white paper, somewhere between 15 and 20 pages, more of an outline, like a school curriculum. Like when you were like every class you took in college or MBA program, you'd get this syllabus, I guess it was called, a syllabus of what we're going to go through. Because I don't want people to be overwhelmed. One thing that I've realized, at least on my YouTube channel, is when you put out 6 videos a day, it's really easy to overwhelm people. And the volume sometimes gets in the way of finding the value. We put out a lot of great info on school, right? We have 2 accountability groups. Frank leads one, Jared leads one. We have at least 1 millionaire conversation a week. I do a monthly call. We have all of these courses. And I'm a little bit afraid that it's too much. So I'm really thinking about creating a syllabus, kind of suggestions or outlines like, hey, if you're brand new, go here first. If you got a couple of units, go here first. You want to come in and just maximize value, spend $20, go take the thousands of dollars in courses, right? The 10-week boot camp, the 6-hour, whatever, creative financing. I just want to give a syllabus, but then more importantly, I want to highlight how to use school. And I'm not going to pretend like I'm a great user of school. I'm trying to figure it out as much as you are. But I do think it requires collaboration, questions, getting uncomfortable. Some people have been a part of school for months now and have yet to put in a post, yet to introduce themselves. Some folks may be even a part of school and haven't even given a comment or a like. One of the things that I could see, I think you could see too, is we have these almost gamification statistics. Like I can see how often you comment or whatnot. There's these scores. And when I see people at 0 or, less than 10, I'm like, either A, they're not a part of it anymore because I don't know if you log in or not, or B, there's no value, which I just have a hard time believing, given all of the comments and collaboration that I see from 80% of the audience, right? I think 80% of our school community today, which is over 250, are active participants. I just want to encourage people once they spend the $20 to maximize value by doing that. So those are things that I'm thinking about. I just want to keep making sure everybody gets wildly successful. So Frank, you lead one of our accountability groups. You're actually on my screen. So I'll go to you first. That was a big ramble, but what are your thoughts?
One of the things that I thought about while you were speaking was sometimes it feels like, just take our Wednesday call, for example, if somebody jumps in there and they, to jump in at first, they might feel like they're committing to something that they're going to be expected to do or say, or I don't know. But it's not like you're joining a club. Nobody expects you to do anything except come in, listen, and
Yeah.
learn. And then if you feel more comfortable to go ahead and ask questions, that's and you and I have spoken before about if somebody gives you the opportunity or the platform to further yourself or better your situation, you need to take it because it's important. And you don't feel like, oh gosh, I got to come back every week now, or
No,
this thing
yeah.
goes on forever. I'm not going to sit here for 3 hours. But you don't have to. Just jump in and get what you need, and hopefully you can give
Yeah.
a little bit too. I think, but I think you're right. Most of the people in the school community seem to be participating. Sometimes they need a little nudge. I think
Mm.
Mark is really good at nudging people, just throwing stuff out there to
Yeah.
get reactions and get people involved.
Yeah. I think that's good. Mark, you out there? I know you don't have your camera on. The financial firefighter. Don't know if you're at work or whatnot, but any thoughts on all that?
Yeah, I think it's a great community, and I think it's really, like Frank is saying, it's just trying to make people feel comfortable when they first, join the group. So that's why I kind of reached out to you and asked if there was a kind of email that you get or notification on who the new members are, so that weekly, we can
Yeah.
just shout out and give them a welcome or aloha,
Yeah.
and hopefully it kind of makes them feel more welcome to post something or just comment on something. So even when I see a new member, I'll try to message them directly and just say
Awesome.
welcome and reach out. So yeah, I mean, anyone out there that hasn't posted or said anything, I think, yeah, just like something, reach out to me, reach out to Frank, and we'll get back to you and then chit chat a little bit.
Yeah. Yeah. The community is great. As the community goes, it's we're going to find these folks like Mark and Frank and Jared and likely others that are really helping amplify the community, right? One thing that's very clear is it's not one rental at a time is not Zuber, right? I don't think it is. I never want it to be just Zuber. It is all good people going in one direction. We do speak the same language, the same vocabulary. There's some things that are important to me like that, but we all have a different story. As Pace Morby said the other day, there's lots of different ways to do this thing, as long as we're asking questions and all of that. So again, remember, this is your live with me. I see 4 comments. There's lots of good mornings. I appreciate all that, Jack, Frank, Jason, Mark. But you can put your questions below. You can raise your hand if you've never met me or want to ask me a question or talk about marathons or whatever you want. This is for you. Oh, we got one first brave person, Dennis. All right, so we'll mute Frank. Dennis, I'm asking to unmute you, so hopefully that works. There he is.
Good morning, everyone. I'm here on the East Coast. Just wanted to introduce myself. Michael, thank you so much for putting this school community together. I came across you probably a while ago, but really started following you when you started talking about David Green. And actually, it's interesting, Pace Morby, you had a Zoom with. I'm actually friends with Pace Morby. I joined his sub-to community when it was initial stage, which was January of 2021. I'm in South Jersey. I'm basically an investor-friendly agent. Me and my wife, we do basically work with, I keep saying basically, we work with real estate investors, but we also have the traditional side of the business. I focus on working with wholesalers, providing them lists, providing them EMD. And the reality is, and I'll say this here, I have not built a portfolio because I found, like with sub twos, the challenge that I always had was the second position and getting people to lend me beyond the time that it takes to refi. So I'm kind of stuck in that state where I know a lot of people that are, we call high level people that you see on stage and stuff like that are in that community, still haven't had that challenge because, there's no way to refi a property if it's less than typically a year. I mean, obviously appreciation has happened, but 2 to 3 years typically. So I still don't own anything. And it's even a little bit embarrassing for me to say that in sub two because I have commanded such a national presence. I have been on stages with Pace Morby and stuff like that. But I figured since everybody openly talks about it here, this would be a good place for me to come in. But I just wanted to introduce myself, say hello, and thank you so much for letting me speak.
No, this is great. And again, Dennis, hopefully something that I can lean on you from, because I undoubtedly we're going to have more and more people talk about sub-2 creative financing in our community. It's not an area I have great experience in. So I'll be tagging you when I see those questions so that you can continue to add value and grow. So I appreciate you introducing yourself, and I look forward to you being a leader in the community, especially around creative financing and sub-2. Thank you.
Thank you.
Absolutely. All right, folks, remember, just raise your hands. Ask me anything you want. Again, I'm talking about buyers community, creative financing, seller financing. I'm here for it. Thoughts on a recession, rates. What if you've ever heard the daily financial news, you want me to talk about an economic term, I am here to help. What do you guys have for me? Otherwise, I'll just make stuff up and riff. Anybody going to raise their hands or put in a comment?
If it's okay, Michael, I'll just jump in. Before we
Please.
get too far, I was going to say to Dennis that if he has time for the East Coast Accountability later today, Jared, who leads the meeting, is also in the Gator community with PACE.
Oh, nice.
So, and he's in Oregon, but I just wanted to put that out there because it seems like they would be a good connection.
Yeah. One thing that's really, I've known Pace, and he said that in the video. Pace and I have known each other for known each other for 5+ years now. Laura Morby, if you guys don't know, was a frequent member of the Millionaires until she had kid number 3. They now have had kid number 4. But Laura Morby and I go back quite a ways as well. So very cool. Armando, your hand is up. Thanks, buddy. What do you got?
Okay, I had to unmute. I'm saying just thank you for being on this call, taking time out of your Sunday morning. So we I appreciate you, and I'm sure everybody else does on the call. I know that you've talked about a lot of this, just the economy and kind of like with rates starting to taper down a little bit in the next few months. But I'm in the higher end houses, like luxury houses, and wanted to get your take on where you see the economy and kind of like what to see for 2025.
Yep.
Everybody's talked about, survive till 25, and now it almost feels like maybe it's going to be after 25. So
yeah,
wanted to talk to you, wanted to get your take on that.
Well, I love that. Is that a backyard? Is that a palm tree behind you? That's looking pretty nice.
Yeah, that's so I'm at
Where are you?
I'm at my parents' house. No, I'm in LA.
Oh, okay.
Let me see if
I was thinking you're on the island.
Yeah, I wish, but it feels like it. I could see Universal Studios from here. I don't know if you can. No,
it's good.
It's blurry, but I'll show it in a second. But yeah, they have a pretty cool view.
I bet looks gorgeous. All right, so let's talk about economy first. We'll talk about consumer psychology, right? The wealth effect. And then we'll get into your concept, because I think this is a layered answer, because at any step, like dominoes, right? At any step of the way, if the domino gets knocked out of the way, it doesn't cascade. So as we're heading into the end of the year, I think I've got this one right. The consumer is pulling back, right? Whatever you want to call it, seasonality, election, economy, whatever. I think we got that right. But frankly, it's almost over, right? We're in September, for heaven's sakes, right? We'll be in January before we know it, right? The Christmas, New Year's will be over. So the question is, where do we go from here? Well, I think the next thing you could count on is the Fed is without question going to start their rate cutting cycle. Having watched the Fed for 30+ years, it is very clear that the Fed doesn't cut once, right? They don't just cut once. Once they cut, it's a series of cuts. So I think we can expect a series. Now, what is a series? It's probably somewhere between 4 and 8 cuts. I believe the bottom today, if you gave the Fed true serum, is 3%. I don't think the Fed wants to go below 3 because they want to have ammunition if things get wild. They don't want to go to 0 again. So that is my belief. Some folks like Anna Kelly think the bottom is 2, but we'll get to that in a minute. So right now, just so if you don't know, we're at between 5.25 and 5.5. So I'm talking about upwards of 200 basis points in cuts. Now you got to remember, just because the Fed cuts 200 does not mean mortgage rates fall. In fact, the Fed funds rate really has almost next to nothing to do with the mortgage rate. You and I have to watch the 10-year note, right? The 10-year note has the greatest impact on the mortgage rates. Now, why is that? Historically speaking, the average consumer refis their mortgage every 8 years. That's why a lot of banks use the 10-year as a proxy. And then they add margin. So historically, the margin has been 180 basis points. So take whatever the 10-year note is, add 1.8, and that's the mortgage rate. Except for the last year, 18 months. It's been as high as 323 basis points. Today, I think we're sitting at 260 basis points. So we still have 80 points of spread. So one of the things I think is going to happen, not only is the Fed going to start cutting, I do believe if we are going into a slower economy, also we're going to see the spread come in. It wouldn't shock me if the spread, which I think currently is 80 basis points, is 50 basis points by the end of the year and maybe 35 basis points by Q2 of next year. Now, why would that be? At some point, the banks need loan volume. And how do they get business? They lower rates. And right now, because there was so much demand and they were nervous about that refi risk, they just kept the spread high. I don't think they can do that in a slower economy. Now, to your question, luxury. Well, if the stats are correct, roughly 30 to 40% of luxury buyers pay cash. They don't care about rates. But that leaves, let's call it 70% of the market. And let's also be honest with each other. Jumbo rates historically have been below conventional rates. It's, higher in consumer, more assets, they get better rates. It's just how the game works. So it wouldn't shock me if mortgage rates, specifically in the jumbo market, got to the low fives. Now the question you have to ask yourself, because you know your market, is, does that move the needle? I suspect it does. Right? Now, back to wealth effect. The one thing you have to watch for in the high-end market is the stock market. For example, I think if I'm not saying it will, I'm just giving you an if we watch the stock market and the NASDAQ, S&P, the Dow fall 30%, if we see the big, the big tech companies take big haircuts, that'll cause a problem, right? One of the things you can look at, for example, is NVIDIA. Why is San Jose real estate so ungodly expensive in the face of a recession? The average NVIDIA employee is worth $10 million. That's a lot of money. So it doesn't matter what's going on in the economy when the average NVIDIA employee is worth $10 million and we have no inventory. They're going to go buy a home. But if NVIDIA, again, just an example, gets whacked in half, that will stop all transactions. Because again, I live in the Valley, I interact with these folks, and when stock prices are near their peak, they act one way. But if you get a 30 or 40 or 50% haircut, even if the investor or the employee is still in the money, their natural behavior is, I'm going to hold, continue to invest, and I'll wait for my stock to come back. So in the high end, if I was a high-end real estate agent, I would be watching the stock market. I don't think I don't think a 1 or 2, 3, even an 8% drop is impactful, but you start to get to 20% or more, which I label a crash, that'll dent consumer psychology. So that was a lot. Any kind of follow-up questions? And yes, you're right. That's a gorgeous backyard. Look at that. That's freaking pretty amazing. Any follow-up questions to that? Armando? Oh, you're on mute, buddy.
Sorry about that. So yeah, the follow-up question would be, or it's mainly, I think the stock market is something that I take a look at, but I don't maybe give it as much importance. But what you're saying is keeping a close eye on that, and it is true. The last 3 houses that I've sold have been all cash, $2.4 million, $2.7 million cash.
Yeah.
Parents help or not parents help, regardless, it's still there's still
Yeah.
cash.
Yeah, that's
And
one thing about the higher end market is you'll always have those cash buyers,
yeah,
right? So if 40% of the market's cash, it people got money. People got money, got some help. But yeah, I think the other 70 or 60% is going to be stock market related. The wealth effect is real. Wealth effect on the upside and on the downside. It really does change consumer behavior.
yeah. Okay. Well, I really appreciate your help.
Yep. Thank you, buddy. Appreciate you. All right, guys, remember you can raise your hand or leave comments. I think there's some more comments. We'll see what's down here. There we go. Yeah. School community with Jared's at 3:30. Oh, here's a question from Jason. Hey, I got a 7.25 on a fourplex in February. At what point in rates would you refi when rates start dropping? So again, there's lots of variables in these kinds of conversations. The first thing I'd want to know, do you have a prepay penalty? Sometimes you sign up for a 1, 2, or 3 year prepayment penalty. So I would ask that question. I would ask a question about condition, right? Are you doing upgrades or remodels, raising rents, all of that? I want you to know that a refi rate is higher than a purchase rate. So just know that going in. But I just talked to Convoy Home Loans, Dustin and Jonathan, on Thursday, and they're getting rate in term, so not cash out, rate in term refis in the 5s, like 5.7 for DSCR loans. 5.7 versus 7.25. I mean, I would do some math. Again, you want to know payback period and all of that. I like 18 months, just my rule of thumb. I want to get my payback from the refi in 18 months or less. If it's 20 months, is it close enough? It's a personal choice. But I would definitely start looking now. I mean, certainly if rates got under 5.5, you definitely got to start, looking at that. That would be my suggestion. And I think rates, wow, let's bet $1 on this. I think the mortgage rate, owner occ, reported by Mortgage Business Daily, I think it'll certainly be, in my opinion, under 6.25 by January 1st. And there's a chance it's under 6 by January. So I think, again, like we kind of talked about with Armando, I think the Fed's clearly going to start cutting, and they're going to start cutting in September. I acknowledged that on the daily financial news this morning. I think, and the rate cutting cycle will be at least 150, if not 200 basis points. And we have the spread collapse of another 80 basis points or half that. Yeah, I think there's a good chance rates are under 6, or yeah, they have a 5 handle on it for Mortgage Business Daily. And again, as Convoy Home Loans is telling us right now, DSCR loans are under conventional. That's not supposed to happen. That's not normal. But it is it is what it is today. So DSCR loans are even below conventional today. So watch for that. Oh yeah, if you're not looking for cash back, frankly, you're part of my community. I would ping Dustin or Jonathan and just say, hey, I'm part of One Rental at a Time. Give me a quote. They'll take care of you. No, no harm, no foul. I think, run the numbers. I think you might be surprised today. If not today, 6 months from now for sure. And the refi wave has just started. Refis were up 94% last week. If we get rates under 6, watch out. All right. What else is going on? Here's a question for you all. So I keep telling you we're in a buyer's market. What do you think that really means? Anybody brave enough to kind of banter with me for a little bit? I really want everybody to know what a buyer's market is, because they are rare and they are short. They don't last very long. Who wants to talk buyer's market? Who wants to do some definitions, play a little game? Anybody brave enough to do that? Frank, you unmuted yourself. Does that mean you're going to give it a shot?
I was building up the courage. Yeah, you saw. I thought it was interesting when you were talking about Casey's last deal and all the concessions that she was able to get. And we closed on a property Thursday, and going through that process, I thought it kind of mimicked what she did on a very small scale. But at the time, when we purchased in St. Louis, the agents have a set $5,000 fee, and typically that gets shared between the buyer and the seller. In this case, we asked the buyer to pay the whole fee. They gave us they helped us with 2 points, and they also lowered the purchase price by $3,000.
Yeah.
So that's something we hadn't been able to do in the past. We closed on one last month as well, and that was a little bit different. So now things seem to be turning. Like you said, hopefully it will last a little bit longer, but with rates going the way they are, it doesn't seem like it'll last too long.
No, we've got till January 15th, at the best case, February 15th. We have this until the spring selling season. Everybody has their own market. Like in Seattle, Beth always tells us it starts in January. If you're in the Northeast and it's still, the frozen tundra, maybe it starts in March, right? So everybody should know their areas. But yeah, we get rates sub 6. We have an economy that's not falling off a cliff, which I don't think it is, right? I think rolling recession versus deep dark recession. I think you're going to see the demand. This concept of marginal demand is so important, right? Because demand is a two-step function, right? Demand is first a willingness to do something and an ability. This is an important concept for most people to understand. Let's talk about demand first. Like the example that I always got when I was getting my econ degree was a red Ferrari, right? How many, young men don't want a red Ferrari? And of course, we all raise our hand. And then the next question from the teacher was, how many of you young men could afford a red Ferrari? And all our hands go down. Demand is 2 steps. Just because you want the red Ferrari and it's on your vision board doesn't mean you count as demand. However, the beauty about demand is things could change. Prices, interest rates, income, discretionary income. And as long as you still want that red Ferrari, things in your life may change where suddenly you have the ability. Right now, demand is being pulled back on both fronts. There's a lot of people that are frankly scared to buy housing today. So they don't even qualify for step 1. They're nervous, they're fearful, they're angry, they're pissed off, whatever it is. And then the other side of demand is just frankly affordability. It's unaffordable for lots of people. However, we get past the election. We get, through the recession or to the other side of the business cycle. We create some tax incentives to spark whatever. That first step of demand is going to flip, and it flips fast. The desire flips fast. And if we go into an environment where rates are down 100 basis points or 120 basis points, and incomes are still going up, and people are feeling more secure in their jobs, that marginal demand is going to come flying back. And if we still are below trend on supply, watch out. So this is why I am harping on my community to understand the power of a buyer's market. Frank, I think your example of Casey is ideal. If you don't know who Casey is, she's my Monday millionaire expert out of Memphis. She brick by brick is her handle. She just closed on her 9th house. This is a B plus A class area. In this particular case, she found a great house that had been listed for 3 weeks or something. And I don't remember the numbers. I think I do remember the number. I think it was listed at $240,000, $239,000. And frankly, Casey could not make it cash flow at $239,000. So that property she watched, it had a price drop to $219,000. right? Which is that's a 10% haircut. So she knew that the owners had some motivation. So she wrote up an offer at like 202,000. Her agent told her that that wouldn't work, right? They just took a haircut, blah, blah, blah. Casey said, no, I can't make it work at any number above 202. So the agent begrudgingly wrote the offer and she got it. The seller didn't even counter. Long story short, she ended up also getting, I think it was 2 points, right, to help her buy the rate down, which was helpful. Then she got like $1,000 in credits because she did an inspection report. Now, why did this work for Casey? Well, first off, she was focused and had discipline. She's always looking. Second, she's tracking. She's watching. She saw the large price drop. She knew there had to be some motivation. Third, she wrote a disrespectful offer, even though her agent told her not to. She wrote it anyway. And then she kept moving forward. Now, how did this work? Her seller, who owned the property free and clear, had already made a financial commitment to their forever home. And they had a hard and fast close date that if they didn't close, they would lose earnest money. Motivated seller. This is what most people don't get about a buyer's market. It will be your best time ever to find those motivated sellers. They are not everywhere. They don't generally raise their hand and say, look at me, but they are there. Having done this for 20 years, they're always there. It's just in a seller's market, they can hide. You take that exact same property, you list that property in 2021, when rates are 3%, it sells, and it probably sells over asking. They were still motivated. It's just, it didn't have time. So that's why I'm telling you, watch days on market. I actually got a text message from somebody in the community the other day talking about a developer who had, I think it was 8 duplexes that they couldn't sell. This individual did not write a disrespectful offer, but he said, you know what? Somebody else did. They got the portfolio of 8 duplexes for 40% off because they could close. The developer wanted out. These were the last 8 duplexes, and they wanted out of that city or state or whatever it was. Folks, watch days on market. Watch days on market. If you should know what your medium days on market is, if it's 11 days or 15 or 18 days, add a couple. Frankly, if you're in my community, I would tell you let's get uncomfortable. Write a disrespectful offer. Like if you've been shopping and looking and you're like, hey, I see this house, it's listed at 279. I think it'll work at 235. You know what? And you haven't written an offer yet, write it at 212. Just see. Now, most of the time, the seller is going to tell you to F off. Who cares? This is a numbers game. You got to get comfortable writing disrespectful offers. And then you got to get comfortable following up. Let's lose this exact example. I already forgot the numbers. Listed at 280. It works at 230. You're going to write it at 210. Just in this example. You write it at 210. They tell you to F off. Great. You know what you do? You put a little reminder in your calendar to follow up in a week or 10 days. And write it again. And write it again. I want you to write that offer at 210 until one of a couple of things happen. One, it sells. Somebody else bought it. 2, it falls off the market because they're not motivated. It expires or they withdraw it. Or 3, they counter. That's the game we play. Most of us, myself included, want one deal a year. I am willing to write lots of offers. I am willing to follow up. And I just need one. So let's realize, again, in a buyer's market, we, the people in my community, have the power. We make the transaction. In a seller's market, we almost have no power. So these don't last long. I have seen maybe 3 buyer's markets in my 20 plus years. They never last long. I think the one in 2010 lasted the longest. That was probably 18 months until Wall Street woke up and just destroyed the market with all their buying. I don't think this one lasts past February 15th. I really don't. Now, of course, I could be wrong. The economy could, collapse. We could have a debt, lots of stuff could make me wrong, but I'm not operating that way. I think this buyer's market will be short, relatively short. I already forgot where I was going with that rant, but hopefully that made sense. Here's my train of thought.
Yeah, I was going to say to Casey's credit as well, the place she just closed on wasn't in her buy area, right?
Yeah, good point. She did what Dion did, right? She
Yeah.
found this new pocket. You're right. Good call.
Yeah, she had to study that real quick and it worked out.
Yeah. Like it. I like it. Jen, we made disrespectful offers and our agent got frustrated. She said she couldn't survive like that. Felt like a breakup. Yeah. I'm very clear with every agent I work with. I tell them ahead of time what I'm going to do. I tell most of my agents to write a template. Like when I was writing lots of offers in 2021, all my agents had a template. All we changed was the address, APN, and price. And they could do it in 3 or 4 minutes. But I told them ahead of time. Now, again, I'm lucky. I have a reputation. They made a lot of money with me, so they all did it. If the agent doesn't want to, fine. Find a new one. There's lots of starving agents today. And then last, if you really like a property, go to the listing agent. This is wild. Listing agents realize we're in a buyer's market. Days on market are up. If you call a listing agent, let's just say the market averages 15 days to get on an offer, and you find a listing that's 30 days, 2x the normal. And in that market, the average contract is 90 days, right? Because when you sign a listing agreement, you say you have the listing for 90 days or 6 months. I would call the listing agent. I have probably bought 30% of my properties directly from the listing agent. Let them double end it. And the reason they wanted to work with me is I was the only person writing an offer. And I told them, hey, I'm willing to write an offer, but I'm a cash flow investor. I run my numbers, blah, blah, blah. I know your listing's at 280, but I can't make it work at 280. I can only make it work at, 212, what I said earlier. And, that agent is going to tell you, oh, my seller won't this, my seller won't that, blah, 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 blah. And well, you can either write this up. We can have a conversation. You could show the agent, you could show the seller that you're doing work for them. At some point, they have to bring an offer to that listing agent or the seller, or they're going to feel like they're not doing their job. Think about being a seller who watched their neighbors' houses sell in days and theirs is just languishing. This is all consumer psychology. At some point, that seller is going to call that agent pissed off. Where are my offers? Where are my offers? You've had 3 open houses and nobody's doing anything. Blah, 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 blah. That agent is going to start listening to you. Okay, let's write up to 212. I don't think it'll go anywhere, but at least it starts a conversation. And again, I'm not telling you to write an offer at 230, which it works. I want you to write something below that so you can negotiate up. This is just the game we're in. And buyer's markets are a lot of fun. If you're willing to play the game, you're willing to follow up. Yes, Jen, lots of agents are, I'll say lazy, frustrated. A lot of agents are going broke. A lot of agents are leaving the business. And the last thing I'll say about agents.
Speak to that because I'm an agent representation here.
Yeah, great.
Okay.
Let's do it, Dennis.
So yes, I agree with that. We actually look at it as a wonderful opportunity now because with the new law that actually got approved, and it's being approved different from state to state, where we don't have to pay representations to the buyer agent.
Yeah.
And when we do a listing, we focus on both sides. When we do a listing, we tell basically the seller, hey, we're gonna go ahead and definitely give a percentage to buyers agents, but they're gonna have to submit an offer what that's gonna look like. Mm-hmm. And because we're in such a strong seller market, and I'm terrified what I'm hearing about the rest of the country. I'm going to speak to our area. We actually on the property that we just basically got under contract, what we did is we told buyer agents, submit your offer with how much you want to get paid.
Yep.
And I think that's changing the game. Obviously, nobody's happy about it because you have to call the listing agent and talk about it. But I think that if you are somebody that is going to go to a listing agent, that's a very strong strategy because they don't have to now worry about buyer representation. The only thing that I will mention is that that creates almost kind of like, fiduciary responsibility, right? So, and co-representation. And what that would mean is that you would essentially have to understand that they have to sort of work for both sides at that point, especially if you tell them they're going to represent me. And the reality is they're still going to represent most of the times the seller.
For sure. No doubt. No doubt.
Even though that's a dual agency and you have to disclose and stuff like that, they're going to try to find the best way how to make it best for the seller, because if things don't work out, they're still going to continue working with the seller, and you can be a one-hit wonder.
No, you're absolutely right. Yeah, this NAR settlement, the paying of the buyer's agent, it has certainly added more chaos to the buying of a home process. Yeah, no doubt. No doubt. So thank you for that. Yeah, and there's still a lot of sellers market. I talked to Lance Lambert from Resi Club. I think the video went live yesterday. Like the Northeast, still no inventory, right? Still very, very much a seller's market. But I would guess just off the total guess, 60% of the country is a buyer's market. 20% might be even, and there's still 20% like the Northeast that's way, way, way seller's market. So,
but it'll be a wave, right? Just like with anything, it's going to come here as well. The question is just a matter of when and how the rates impact. Because, like I said, anything that's under 400,000, that's fixed up, multiple offers, bidding wars is just insane. Anything that you get up to higher, because remember the interest rates are so high, that's when it becomes an affordability issue for a lot of people.
Agreed. Yeah, very cool. Thank you, Dennis. So, Catherine, you have your hands up. Then I'll go to Dwayne's question about second mortgages, but we'll go to Catherine first. You have your hands up, I think. Catherine, are you there?
Yes, sorry.
Okay.
I'm on a different device. Can you hear me?
I can. How are you?
I'm well. And you?
Getting over a cold, so I'm doing much better.
Yes, I heard you a few days ago. You didn't sound well. It's good to hear you feeling better. I just wanted to add to that point you were talking about when you go to the listing agent.
Yep.
And, and I completely get it. It's true. A lot of listing agents will be like, oh, my seller won't do this. They won't do that. Yep. And because for whatever reason, you think an offer is an offer, but a lot of them are like that. Tell them, and just, it's easy enough to do it diplomatically. Just say, I understand that that's what you think, but please take my offer to your client. And if they don't like it, ask them to sign that they have rejected it.
Yes.
They are required to do that. The agent is required to present all offers by the Code of Ethics. Yes. If they don't do that, they can get in a boatload of trouble. So if you say that to them diplomatically, like, I understand you that's what you believe, but please take my offer to your client and ask them to at least look at it. And if they don't like it, have them sign it that they rejected it.
I love that. That's great advice, because you're absolutely right. They are required to take them. And the only way you as a buyer writing an offer could prove that is if they do sign that rejection. That's a great piece of advice.
Just a little tactic. Okay. Take care, guys.
I like it. Thank you, Catherine. All right, Dwayne, what are my thoughts about Freddie Mac buying second mortgages? So I believe this was a proposal. I don't think it's been approved yet, but let's kind of paint the vision. So to date, Freddie Mac has only done Freddie, Fannie, the government has only bought first mortgages. We have undoubtedly, and everybody on this channel knows, seen crazy appreciation the last 3, 4, 5 years. A lot of these home purchases have a huge amount of equity. And we have what I call interest rate lock-in, right? If you got a mortgage rate below 3%, you're not touching that. You're just not touching that. but you still have an asset that, you know, is up 50%. So I think it's an interesting idea. There's a lot of subtleties in the proposal that most people missed that I think are important. For example, Freddie will only do a second position if Freddie is the first. Now, why is that important? Well, I can tell you, having survived the global financial crisis, where Countrywide and IndyMac and Washington Mutual and all these people were doing bogus mortgages, where there was first and seconds all over the place. The nightmare scenario came when one bank owned the first and a different bank owned the second, because they would fight. And I think one of the subtleties of this proposal by Freddie Mac that most people missed is they will only do a second on their first, which means, heaven forbid, we go through another global financial crisis. We only have one lender to deal with. I think that is a great addition. And second, it will greatly reduce the number of second loans, because a lot of people look at this second loan procedure and go, oh my God, free money. Everybody's going to do this and everybody's going to do that. And if you just read the headlines, you could certainly think that. I think this, you know, if loan volume is 100 million, and if Freddie approves this, it probably only unlocks like 1% more. It's because it's going to be so restrictive. It's just, it has so many guardrails that I don't think it's a problem. Now let's just play the other angle. Let's say they try this, Dwayne, and it works, right? Loan volume goes up a little bit. And then some other lender goes, you know what? Let's go do seconds, and we'll do seconds on anybody else's first. That would scare me. That would scare me. But I wouldn't be scared until that happened. Does that make sense? Cool. Awesome. All right. Anybody else have questions? We got about 10 or 15 minutes more. I'm just scrolling through all the comments. Oh, you want a yellow Corvette or a maroon F450? I like it. All right. That works. All right. Any other questions? Let's see.
Hey, Michael, am I allowed to talk? I can't find the hand raising button.
I can hear you. Yeah. Where's the hand? Yeah, go ahead. I hear you. Go, Jack.
I think it's just because of my phone, but what I was curious about, I asked earlier, and I think it just got buried in the comments.
Sorry.
So I have two duplexes. They're side by side, two different properties, tax ID, two different tax ID numbers.
Yep. Mm-hmm.
But the buildings are actually connected. So somewhere along the line, someone split them, but the roofs are actually connected. They're all one big roof. Some of the support beams are actually run from one building to the other.
Mm.
It's truly just a fourplex that has a sidewalk that runs down the middle of it, is what it really is.
Okay.
When I go to refinance next year, after I'm done doing all the work and stuff, is it better to go to county and have this two tax ID parcels put as one and then refinance?
Well, let me ask you a question. How did you buy it?
I had to buy them both at the same time.
Oh, I understand. So just one transaction. Two transactions.
Two transactions, yeah. But with the same closing day.
Right. Okay, so you had two offers, two closings, two everythings, two appraisals, all that.
Yep.
Well, what I would probably do in that situation, because going to the county and get it reassessed, all of that, that's a lot of paperwork and money, frankly. I would probably go to a DSCR lender and do a portfolio loan, which is you could put two assets on one loan. You're going to greatly reduce the refis. The rates won't be meaningfully different. Might be up an eighth or something. But I would probably do a DSCR versus a conventional loan. Because if you're going conventional, they're going to treat two APNs, two properties, two refis, two closings, two inspections, all of that. A DSCR lender is more flexible.
Okay.
Does that make sense?
Yep. Thank you.
Yeah, of course. Now, I guess the other thing, Jack, I'm thinking about now that I just play with this a little more, sometimes in cities, there are whole streets of these duplexes / quads. Is the street full of these, or is it like an oddball property? Jack?
You know, I'm not 100% positive. I'll have to, next time I drive the street, take a look.
Yeah, the reason I
think-
asked that is if that street or that area has lots of these, it might be worth a conversation with the county, because if you're not the first one to do it, there might be a streamlined process. But that said, I mean, thinking about selling it later, generally speaking, duplexes you could sell for higher per door. So it might benefit you, frankly, to keep it as a duplex, you know, thinking about your exit.
Okay.
Yeah, because
All right.
usually a fourplex, you know, just for example, a duplex might be 150K a door, but a fourplex will probably be 125K a door, or 130 or something. So yeah, if you ever have thoughts of selling it 5-10 years, it might be beneficial to keep it as a duplex. Just a thought. All right.
Okay. Thank you so much.
Of course. That's why we're here. Let's see. Any other questions, comments? This has been fun. Remember, folks, if you're a part of school, do me a favor. If you haven't introduced yourself, let's go. You want to go in there and, you know, send some love to others, comments, all of that. I would appreciate it. Even if you just hit a thumbs up. We got to, the beauty of school is it's really the community. So a little help would be great. I would appreciate it. All right. We got tax implications. Yep. Property. Yep. Yeah. Yeah, definitely. There's a whole bunch of things to think about merging APNs. And just so you know, Jack, those properties aren't as unusual. I think I own 2 of those. In my case, it's the carports that are connected, but same idea. It's pretty funny. Any other questions? I think I got them all. May have missed a couple. So as we kind of wrap this up, I'd love to hear from you. What millionaire, like my whole Rolodex of millionaires, who would you like to see next, so you could get on one of these and ask them questions? You can let me know that. If you have other recommendations of people outside our community that you would love me to try to get intros to, I'm happy to try to bring on some more folks, some new voices and whatnot. So, yeah.
I have a question, Mike.
Hey, Dwayne.
You've been extremely helpful. I signed up to go to your conference next year. I just came out of Limitless for with Ken McElroy.
McElroy, yeah.
Yeah, that was insightful.
Awesome.
Do you plan on scaling the verticals? You know, we focus heavily on property assets, but there are also other verticals. Like, are you going to scale your platform a little bit into some other verticals? Like maybe like rental, you know, having a rental business, or things like other types of verticals, a little bit that mesh in with property assets?
Yeah, my hope is, you know, the one rental at a time community mantra just keeps growing and growing, right? I want this thing to live 50 years after I'm dead and gone. And the only way that happens is if I keep being consistent and attracting other folks. So I can only ever speak to what I'm good at. So you'll never see me pretend. But that said, you know, the name's getting bigger. We got people like Pace Morby reaching out to me saying, hey, let's go do a 2-hour chat. That's a great sign.
Right.
That means the community is working. I expect more and more folks who I get to know and respect will want to be a part of this. So yes, my hope is, frankly, my consistency is attractive to other folks that have other areas of expertise, and we all just get bigger together. So that's certainly my vision.
I remember in an interview, you stated briefly that you were considering private equity or starting one. Is that a thing? Did you start it? Are you still in there?
No.
Okay.
Yeah, it's something that I am not opposed to,
Right.
but the market would have to go that direction. Like, to tie this together, one of the things, if you guys watched my interview with Jonathan Twomey last week, I think there's 50% haircuts coming to Class B and Class C apartments, but it's not till 2026. Let's just say summer of 2026, and I'm seeing apartment buildings 50% off that I could control, operate, and then wait for the next upcycle. I would probably do something in that environment, because one of the things that I learned during the crash is Olivia and I can only do so much. Our capital only goes so far. And if that opportunity came and it was an elephant, I might look at it. But it's certainly, I have no interest in starting a fund today.
Okay.
No interest. But if the market turned that way, maybe. I reserve the right to change my opinion.
All right, man. I
make
appreciate
sense?
your authenticity, and I appreciate you always telling the truth. And
Oh, yeah.
thanks for the Pace Morby. It was hard to see past the marketing. Pace, he's really good at marketing. I mean, he's asininely good. So
Yeah.
thank you for the reality of the interview. That was very, very helpful.
Awesome, guys. Well, if you're amazing, thank you for spending an hour with me on Sunday. Do me a favor, go to school, introduce yourself, give a comment. Let's get that vibe going. I appreciate y'all. Take care of yourself. Later.